Hello viewers, so welcome to my channel. I'm Hasham. Last video, 3 problems I have completed on computing the income from house property. So comparatively, if you compare the computation of salary and computation of house property is much easier. Only few provisions you have to remember, and the format is also very simple. Take the gross annual value minus municipal taxes, you'll get net annual value. From that, deductions under section 24. Only 2 deductions are there, 24A, 24B. Standard deduction, 30% of NAV, or interest on loan taken to purchase, construct the house. That's it. So simple. But every problem will come across one new point. So you have to focus on that new point, whatever is there in the every new problem. Next problem. So before starting the problem number 4, I expect my viewers to have a printout of the problems which I have given in the link under my description. Take the screenshot of the answer from 4th problem, then I'll explain every point in detail. Now, see the 4th problem. From the particulars given below, compute the income from house property for the current assessment year of Srimati Manisha. So municipal value means municipal rental value, MRV 30,000. Rent received 55,000, due 5,000. Actually, when we calculate ARV, we need the rent received and rent receivable. Here 55,000 is the rent received and 5,000 is receivable. We add up 55 plus 5, 60,000 is the ARV. Now, date of completion of construction 31st August 2021. Our current previous year begins from 1st April 2021 to 31st March 2022. So during this current previous year, the construction was completed on 31st August. Then land revenue 600. Land revenue should be ignored, not allowed as deduction. Then municipal taxes 10%. Fair rental value 72,000. Nature of use let out for commercial purpose. Repairs, ground rent ignore. Cost of facilities provided to the tenant is 4,600. Now this is the new point. Some services are provided by the landlord, by the owner to the tenant, but no separate charges are charged. In the previous problem we have seen some service charges are charged by the owner. But in this problem, no separate service charges are taken from the tenant. That means this cost of facilities should be deducted from ARV. To get the ARV, we write ARV is equal to rent received plus rent receivable minus cost of facilities provided. Municipal taxes and repair expense are paid by the tenant. So according to the rental agreement, it is written that the municipal taxes and repair are to be borne by the tenant. Ignore for repair, but municipal taxes will be allowed as deduction only if it is paid by the owner. But if municipal taxes are paid by the tenant, it is not allowed as deduction. New point. So in this problem, no municipal taxes deduction will be allowed because it is paid by the tenant. The house is constructed by taking a loan of 5 lakh rupees at 15% rate on 1st November 2019, and no amount of principal is repaid so far. Interest is paid as and when it is due. Actually, our current previous year is 21-22, but this SSC has taken a loan to construct the house. When she has taken the loan on 1st November 2019, and construction is completed on 31st August 2021. That means there is a prior construction period interest. So according to the provisions of Income Tax Act, if an SSC has taken a loan and started construction, any interest paid on loan before the date of construction, that will be allowed as deduction in 5 annual equal installments from the date of completion of construction. So here in 2019 she has taken then 2019 to 2020, then 2020 to 2021. These are the prior period interest. And we, in working note, we calculate what is the total interest of prior period construction, right? Now, see the solution. Computation of income from house property of Srimati Manisha for the assessment year. First, gross annual value in working note we find out. Less municipal taxes, net annual value. Remember, municipal taxes deduction is not allowed because it is paid by the tenant. In working note, you should write down. Then net annual value. Deductions under section 24, standard deduction under section 24A, 30% of NAV. Then interest on loan taken to construct the house. In the whole problem, the difficult point is this one only. Interest on loan taken to construct the house. Remaining parts are very same. Now ARV. Rent received plus rent due minus cost of facilities provided to the tenant. In this problem, the owner is not charging separate charges for services. So this cost of facilities provided should be deducted from the rent. The rent received is 55,000, rent receivable is 5,000, minus cost of facility provided 4,600. So total 55,400. This is the ARV. We are not given standard rent. That means the house is not covered under Rent Control Act. So GAV will be calculated higher of the following three. MRV 30,000 given, FRV 72,000 given, ARV just now we have calculated 55,400. The highest among these three is 72,000. So we got gross annual value 72,000. No municipal taxes. 72,000 NAV. Now standard deduction 30% of NAV. 30% of 72,000. 21,600. Now interest on loan taken to construct the house. This you need more concentration. Interest on loan. Interest for prior period to construction. Before construction date, how much interest is paid? So we have to start from the date when the loan is taken. The loan is taken from 1st November 2019. This is the date on which loan is taken. So year ends, every year end on 31st March. So from 1st November 2019 to 31st March 2020. Because we are closing the year on 31st March. So how many months? November, December, January, February, March. 5 months. So 5 months interest we have to calculate. 5 lakh into 15% into 5 by 12. You'll get 31,250. This is the 5 months interest up to 31st March 2020. Now new year begins from 1st April 2020 to 31st March 2021. Right? Complete 1 year. 1st April 2020 to 31st March 2021. This is also before construction period. Because construction was completed on 31st August 2021. So this 1 year interest, 5 lakh into 15%, 75,000. Total interest is 1,06,250. This is the total interest before the construction period. Right? So this 1,06,250 will be allowed as deduction in 5 annual equal installments according to the provisions given by Income Tax Act. So divide by 5. 1,06,250 divide by 5. 21,250. Every year 21,250 interest will be allowed as deduction. This is the prior period interest. Prior to construction period interest. And current year, whatever be the date of completion of construction, the year, full year interest will be allowed in the year of completion of construction. In current year, on 31st August 2021, the construction was completed. But we have to take for the whole year. Interest will be allowed for whole year. Interest from 1st April 2021 to 31st March 2022. Whole year. First year of completion of construction, 1 year interest is allowed as reduction. That is 75,000. So current year's interest is 75,000 and before construction period interest is 21,250. The total interest is 96,250. This is the total interest allowed here, 96,250. Now add up 21,600 plus 96,250, 1,17,850. Now deduct 72,000 minus 1,17,850, you are getting negative figure. So there is no income, there is loss. The loss from house property minus 45,850. That's it. In working note, you should write municipal taxes are paid by tenant, so no deduction will be allowed. Repairs, ground rent, land revenue, not allowed as deduction. Only 2 deductions are allowed. Finished. So whatever is given in the problem, simply write a note, not allowed. Next, problem number 5. Fifth problem. On 1st April 2021, Mr. Manohar purchased a house in Hyderabad for residential purpose for 23 lakhs. For this, he took loan at 10% from Central Bank of India. That means loan is taken to purchase the house. So interest paid on loan will be allowed as deduction. Whether paid or not, immaterial. Immaterial. Interest, even if it is due, it will be allowed as deduction. So how much interest? 23 lakh into 10%. 2,30,000 interest will be allowed. Which has been let out to Mr. K.R. Reddy on a monthly rent of 20,000. This is the actual rent. The house was occupied throughout the year. The municipal valuation, MRV, 1 lakh. Municipal taxes, 10%. On what? Municipal valuation. Municipal valuation 1 lakh, municipal taxes are 10%. So 10% of 1 lakh, 10,000 is the municipal taxes. Standard rent. Wow, standard rent is given, so the house is covered under Rent Control Act. So in 3 steps, we have to calculate the GAV. First, higher, second, lower, third, higher. Then Mr. K.R. Reddy could have obtained a similar house at a rent of 14,000 per month. This is the FRV. The rent of similar house in the same locality, that is called FRV, 14,000 per month. During the year, Mr. K.R. Reddy did not pay the rent for the month of March and vacated the house. That means there is an unrealized rent. The tenant has not paid the month of rent for the month of March and he vacated the house. It is clear that it is unrealized rent. So rent is received only for 11 months. Only for 11 months rent we should take. Compute the income from house property. Again, very easy problem. Computation of income from house property of Mr. Manohar for the assessment year 2020. GAV minus municipal taxes. Municipal taxes are given 10% of municipal valuation. So municipal valuation 1 lakh, 10% of 1 lakh is 10,000. NAV. Less standard action under section 24A, 30% of NAV. Interest on loan taken to purchase the house, 10% of 23 lakhs is 2,30,000. Now first we need to calculate GAV, gross annual value. GAV, the house is governed by Rent Control Act, so GAV is calculated in the following 3 steps. First step, ERV, expected rental value, which is higher of the following 2, MRV, FRV. So MRV is 1 lakh, FRV is 14,000 per month into 12, 1,68,000. So 1 lakh or 1,68,000, whichever is higher. 1,68,000 is the ERV. Second step, expected ERV is lower of the following 2. First ERV, what we got in step 1, 1,68,000. SRV is given as 1,50,000. So whichever is lower is the expected ERV. So 1,50,000 is the expected ERV. Now GAV, gross annual value, is higher of the following 2. Expected ERV we got 1,50,000 in the second step, or actual rental value. Rent of 12 months minus unrealized rent. 20,000 into 12 for 1 year rent, it is 2,40,000. But complete 2,40,000 is not received. In the month of March, the tenant has not paid the rent and vacated the house. So there is unrealized rent for 1 month. So unrealized rent for 1 month, 20,000 into 1, 20,000. So 240 minus 20, 2,20,000 is the ARV. So here 1,50,000 or 2,20,000, whichever is higher is the GAV. So GAV is 2,20,000. So here I have taken GAV, gross annual value, 2,20,000. Municipal taxes, 10% of 1 lakh is 10,000. Deduct 2,10,000. Standard deduction, that is 30% of NAV, 30% of 2,10,000, 63,000. Interest on loan taken to purchase the house, 10% of 23 lakh, 2,30,000. That's it. Take the total, 63 plus 2,30,000, 2,93,000. Now subtract. 2,10,000 minus 2,93,000, 83,000 negative minus, that means loss. That is loss. The loss from house property is 83,000 negative. That's all. This is the end of fifth problem. Now problem number 6. Mrs. Sandhya of 45 years of age owns a house which was let out to Mrs. Devi on a rent of 10,000 per month. This is the actual rent, 10,000 per month. Municipal value of it is 1 lakh MRV and FRV is 1,10,000. Standard rent is 75,000. Again, the house is governed by Rent Control Act. So 3 steps we have to follow just like the previous problem. Higher, lower, higher. These 3 words you remember. Now, Mrs. Devi did not pay the rent for July and so was made to vacate the house. That means April, May, June. These 3 months she stayed. In July month, she has not paid the rent and vacated the house. That means there is 1 month unrealized rent. The owner did not get the rent of July, right? And then on 1st August, she let out to Mrs. Shanti on a rent of rupees 9,000 per month. From 1st August onwards, a new tenant has come, Shanti, and the owner is charging 9,000 rupees per month. So what we have to do? First 4 months, then 8 months. First 4 months, 10,000. Next 8 months, 9,000. 4 plus 8, 12. But 1 month is unrealized. The 1 month of 10,000 is unrealized. Deduct 10,000. Then expenses incurred during the previous year, repair 8,000, ignore. Municipal tax of 15,000, allowed. And interest on loan taken to construct the house, 70,000, allowed. Calculate the income from house property. That's it. Easy problem. Computation of income from house property of Mrs. Sandhya for the assessment year. Gross annual value, we have to calculate in working note. Municipal taxes given in the problem 15,000 directly as it is I have taken. Net annual value. Less standard deduction under section 24A, 30% of NAV. Interest on loan taken to construct the house, 70,000 given in the problem. Directly I have taken. The only thing you have to remember is regarding GAV, gross annual value. The house is governed by Rent Control Act or covered by Rent Control Act. So GAV will be calculated in the following 3 steps. The first step, ERV, expected rental value, which is higher of the following 2. MRV, FRV. MRV is given 1 lakh, FRV is given 1,10,000 given in the problem. Higher 1,10,000 is the ERV. Second step, expected ERV is lower of the following 2. Second step. So whatever ERV we got in the first step, that we take. ERV is 1,10,000. SRV, standard rental value given in the problem, that is 75,000. Whichever is lower, that is called expected ERV. Lower is 75,000. Now step 3. GAV is higher of the following 2. First one, expected ERV, which we got in second step. Second step we got 75,000. The expected ERV 75,000. ARV, actual rental value. Here you concentrate. It's a difficult point. First 4 months, Mrs. Devi was a tenant. She has not paid the rent for July and she has vacated. The first 4 months, April, May, June, July, the rent was 10,000. So 10,000 into 4, 40,000. So out of 12 months, leave the first 4 months, 8 months. That 8 months, it was let out to another tenant, Shanti, for rupees 9,000. So 9,000 into 8 is 72,000. But 1 month rent is unrealized, July month. The old tenant has not paid the rent of July and vacated. That is called unrealized rent. So deduct 1 month rent, 10,000 into 1. So 10,000 into 4, 40,000, 9,000 into 8, 72,000 minus 10,000. 1,02,000 is the ARV. So here ARV 1,02,000. GAV is higher of the following two: 75,000 or 1,02,000, whichever is higher. 1,02,000 is higher, that is GAV. So here for your information I have written ARV is equal to rent of 12 months minus unrealized rent. Now this GAV 1,02,000, take 1,02,000 minus municipal taxes 15,000, 87,000 is the NAV. Now deduct standard deduction 30% of NAV is 26,100. Interest on loan taken to construct the house directly given in the problem, no calculations, nothing, 70,000. So total 96,100 deduct. So 87,000 minus 96,100, again you are getting negative figure, minus 9,600. That means it's a loss. Loss from house property 9,100. That's all. Totally 6 problems I have explained on computing the income from house property. What you have seen, every problem 95%, 90% points are same. Only 5-10% points are different. So your job is to focus on that new point. Remaining all points are similar. There is nothing to worry about the remaining 90%, only 10%. Some points, 1 or 2 points are different points in every problem. So focus on that. Easily you can get the command. So more scoring unit is computing the income from house property. So I'm applying my 100% effort in explaining each and every point. So if you are satisfied, give a like to the video, share my channel, subscribe. If you have not yet subscribed, give your comments and buy the super thanks which is given below my video. Inshallah, we'll continue the next problem in the next video.